All right, good morning, everyone. Hopefully you can hear me loud and clear this time around. Sounds like the mic is working, so I'm happy about that. Let's go ahead and start this off. I'm going to start, as we always do here, with some economic news from the calendar. And let me know in the chat section, right? Is the mic sounding loud and clear? If it's better, let me know. Again, I would love to hear some live feedback from you guys and just ensuring that the quality is up to par and better. So fantastic. Looks like we have some sound goods in the chat. Great. All right, so Monday is obviously off the docket. That was yesterday, no longer a big deal. This morning at 8:30, we got PPI. That was the big one, at least before the bell. And it's really all going to boil down to tomorrow and what happens at the 2 p.m. FOMC announcement meeting minutes. Of course, that's the big deal for this upcoming week. Does the market hang in limbo is, of course, the question before the meeting actually is released. So that's what we have to think about. Do we hang in limbo today? Do we get another day of balance based on what's going on in the overnight session? I'm not entirely convinced that we get balance. I think we get some sort of nice reaction off of the open. So that's what we've got to prepare for from the economic front. Let's go ahead and continue along. Briefly look at the earnings calendar again. The big one for today, obviously, is going to be Roblox, maybe even Upstart. Airbnb, so for Airbnb, it's a great company. I hold it in my long term. But in terms of trading the actual earnings, not really something I'm too interested in. So big one, probably Roblox to watch after the bell today. Let's go ahead and wrap that up. So we're done with the economics and the earnings calendar. And I would just remind you again, if you're watching on YouTube, if you want to increase the quality of the video, then go ahead and click on the little gear icon and change it to 1080p 60 frames per second. That will make the quality a little bit better. So we've done our economic news. We've done our earnings calendar. We should be getting into now our ES futures. Okay, so what do we have on the docket today? Where are we opening? What is the inventory position? Let's zoom in. And what we can see here is that we will be opening on a true gap up, which again is why I think that, the market probably won't hang out in limbo into this FOMC announcement. So on the true gap up, what is overnight inventory? Is it net long? Is it net short? In here, obviously you can see if we just extend the close that it was fairly balanced. And then around 3 a.m., when the overnights or the foreign sessions open rather, in different parts of the world, big reaction to the upside, pushing us out of the prior day's range, and now inventory in the overnight is obviously net long. So we're probably split, 90-10 net long inventory. So that does set up the possibility for a shock and awe open this morning, and we can look for the gap rules to be in play. Now, the gap rules would state, okay, if let's just say that we open somewhere in here, obviously this is going to continue to wiggle around. If we fail to take out the overnight high and roll back over through the opening print, we're looking for a short to correct this inventory, basically all of this net long activity, at least to yesterday's high, if not the point of control from yesterday, which we'll check out on the market profile in just a moment here. So that's the inventory correction play. Because we're out of balance, because we have this shock and awe on the open, I would start to watch out for that. Obviously, the aggressive trade off of the open is if we have a 1 minute bar that looks something like this, it's not really getting any traction to the upside. Maybe it's a red bar. You can short the low of that bar, looking for the rotation to yesterday's high with a stop loss up and over the high of that bar. Now, that's the important part, is that you need to respect that stop loss. Otherwise, if this runs to the overnight high and hangs out up here, your risk reward is now all kinds of off. So if you take the aggressive trade, you need to be a disciplined trader. You need to stop out over the bar's high just in case you get that move to the overnight high. Now, what happens if we get no gap fill whatsoever off the open, right? This is obviously another scenario. If we get nothing that takes out the open, nothing that takes out the first 1 minute low, it's not a short, right? You want to go with all gaps that don't fill immediately, and we would just target first the overnight high if you're an aggressive long trader. Again, that setup's probably not the one that I would look to be taking, but instead, if we can put in some sort of structural flag element here, or maybe even an ascending triangle, something that sets up the breakout up and over the overnight high, that starts to become a little bit more attractive to the upside here inside of the futures. Again, that's if there's no gap fill whatsoever. You always want to go in the direction of the gap, okay? So those are the scenarios to watch out for on the open here in the ES. We will have early morning trade available because of this imbalance. Let's take a brief look at our market profile here. So I'm going to bring that screen back up. And what you'll notice, again, the reason why this shock and awe open is so important and it works so well, I was talking with someone last night about this. Look at all of the fair value that was established in this area right here. You can see it was the point of control from last Friday. It's where we had fair value on the session from yesterday. And in the overnight session, you get that emotional move, which creates a double distribution in the overnight profile. So any sort of retracement, the obvious target becomes to the prior day's high and where we had fair value, back and forth, two-sided trade. So that's what we're thinking about and why the inventory could correct based on this imbalance. Other than that, the profile is not really screaming a whole lot at us. We did technically have a poor high from yesterday's session. It's not the end of the world. Obviously, if we're opening above it and we come down and tag it, that will be considered repaired and we'll go on from there. We had decent excess at the lows and it was just a normal distribution. Not a whole lot to read into from that perspective, okay? So let me know. Going to do another check-in because these are new streams. Let me know in the chat. Is everything still sounding fine? Can you see fine? I would love to hear a quick little update. Again, just because this is a new thing, I'm not going to do this repeatedly over and over and over again in the future, but I want to make sure the settings are sounding good for now. So let me know in the chat. Cool. So that is our state of the futures, all right? Everything is okay. Nothing too out of whack here. We're looking for an inventory correction on the open. Let's go back on over and take a quick look at our S&P sectors here, because this is going to help us understand where there should be strength and weakness in the marketplace. The main things I want to look at and talk about today are the XLK, which is opening on a gap up, and most importantly, it's gapping up over this area right here, the prior day's high. Clearly, that's what makes it a gap up, but it's the 156, level that we're recapturing. So because of that, we know that it was the important breakout area from back in here. It's not the end of the world, right? We could technically have the possibility here for a higher set of lows to have formed if we rotate higher and make an equal high. That would keep the XLK in a daily uptrend, technically speaking, and we would go from there, right? We would need that higher high eventually, but for now, the fact that it's gapping up over that 156 is a little bit more promising as opposed to all-out doomsday, right? So XLK, good strength in the tech sector. We'll see when we get to the core list of companies that many things are gapping up. Let's go ahead and continue along to the XLF for financials here. This one, what I want to talk about in this sector is the fact that we have a hold essentially of the 39 quarter. Because we have this hold, we can start to look for potential bounces in our financial companies. So think names like Morgan Stanley, JP Morgan, Citibank, Bank of America, all of those things. If you're looking at any bullish reversal patterns in those names, the sector itself would confirm that we're at support. We have a bit of a lower wick from yesterday's session. We're holding the 50 SMA. And in the post-market, pre-market, right, you can see we're opening right at essentially the highs of yesterday's session instead of weak down here at the lows. So I really like the fact that there is potential here for both the financials and the tech sector to be in sync to the upside, which, as we know, being the two heaviest weighted sectors in the S&P 500, could result in a nice trend day to the upside. Now, of course, don't forget, we do still have the inventory imbalance, so I wouldn't chase it long on the open. We talked about what we're going to do on the open, what we're watching for, but throughout the course of the day, if we get the inventory correction and then we put in a double bottom, a hammer candle low on the gap fill, it would make sense that both of our heavy weighted sectors are pulling higher. We can look for trend higher in the S&P 500, okay? The last thing I want to point out is the XLE. We know that it was just an absolute monster in here. It was looking like it was going to go higher. A little bit of relative weakness now, right? So if we zoom in, what I want to point out is that we have a 3-day flush point. Let me just draw it in with a regular level so we're not guessing here. I'm going to put that in. And now, if we take a look at the overnight session, you'll notice we're rejecting, if you combine them, resisting, that's what I was going for. Anyways, 67.90s, 68, the whole dollar. We're resisting at the 3-day, 4-day flush point now that we've broken it in the post market. So maybe start watching for some pullbacks in the energy names. Again, you're looking for things in Dominion, XOM, which is ExxonMobil, CVX, OXY. Those are the names I would probably look for in terms of the energy sector pullback here. Again, would you overstay your welcome? No, you're not looking for this to roll over and go down to like 60. But maybe we make it to the prior support point here on the daily, which is a 2-day balance low around 67.11, right? So that could be in play here. Notice that it's almost there actually in the post market. So the break of the overnight low would be what sets up the move into that roughly 67.10 area. So XLE, a little bit of weakness. It's not really going to have a huge impact on the S&P 500 simply because of its lack of sector weighting, right? So that's our S&P 500 marketplace in a nutshell here. Let me know. Drop a 1 in the chat if you think we're going to hold the gap up today. Drop a 2 in the chat if you think that we are going to fade back into yesterday's range and we remain in yesterday's range and it's more bearish than bullish, okay? Again, 1 if you think it's a gap up, 2 if you think it's a rotation back into range from yesterday. All right, now that we have the S&P out of the way, let's continue along in the broad market here. We're going to jump into the QQQ. And, oh wow, lots of 2s in the chat. People are not trusting this gap up here. Interesting. Very, very interesting. Anyways, in the QQQ, we know we have a gap up as well, simply because of what we saw in the XLK. Lots of 2s in the chat. No one's trusting the move today. All right, we'll see what happens. For now, opening on the gap up as well in the QQQ, so watch out for the same exact scenarios that we outlined in the S&P 500 in terms of gap rules. If we're opening here, if we fail to take out the overnight high, which is up there, cross back down through the open, you're looking for a short to fill the gap to the prior day's high, roughly 351. From there, reevaluate the chart. Are we going to get the gap fill reversal? Are we going to accept back into prior day's range? That's what we're thinking about here. So QQQ, it is slated to push some of tech higher in the opening print here. But what I would point out about the QQQ is a little bit different. We are currently underneath still that 354, which is the all-important daily level on the chart here. So that's what I'm sort of thinking about there. A little bit of an opportunity for the fade because of the back test here at that area, the 354, would be more willing to give the QQQ tech sector essentially the upper hand as opposed to looking at the S&P as a whole for that inventory correction on the open. That's all I'm getting at in the Qs. Let's continue along, round out our broad market here with, of course, our IWM. And zooming in over here, you can clearly see that we are back above, at least in the after hours session here, the extended hours, we're back above the 202.80, which is the top of the balance right here. Essentially, the look above and fail is not panning out yet. At least there is potential because this one is pulling back aggressively. It's not technically gapping out of yesterday's range, that it just remains in range and does something like that. I wouldn't stop out of any of those positions unless we probably get a move up and over here, maybe Friday's high. That's where you start to think about, all right, the look above and fail may not be panning out. 208 is still that really solid area of resistance coming from the weekly. Let me illustrate that really quick, and then we'll get off this broad market stuff and get into some more interesting ideas. So here is that weekly balance. Again, it looks like for now, that's kind of the scenario that's panning out here. So we'll see what happens, okay? So IWM, probably not touching it because we are opening in range, much more attractive opportunities in the indexes, in the S&Ps, and the QQQ in my estimation. So let's get into our core list of companies now. Apple is the first one on the chopping block today. If we go down back to a daily time frame chart, just like in our tech sector, we're gapping up out of range. You can start to think of this as potentially really sloppy, but right, it is technically an inverted head and shoulders on like a 15 or a 30-minute chart. Big move higher, very emotional move higher. So again, we're looking for that sort of inventory correction in Apple. To me, what complicates this trade just slightly, but it does complicate it, is the fact that we're opening around 171, which is the bottom end of the daily consolidation up here. So there's a couple of things I would watch out for. If we accept above 171, then maybe start to be a little bit more skeptical of the inventory correction. But if we can crack that on the open and maybe put in the bearish pattern underneath, so something that looks like this, maybe a symmetrical triangle below or just a bear flag on the open below, something like that, that sets up your move to fill the gap to yesterday's high. So I like that. The fact that we held 168 yesterday, again, I think there's a lot of fair value down here. So this area should start to act as a magnet in just this general area of the chart here. But if we go back down to 168 on a second attempt after holding it on the first one here off of a lower high, I know that's kind of a mouthful, but if we open here, drive lower to that 168, that wouldn't be too promising, right? What would we have? Certainly an H pattern. You could look at it like this. I would just look at it as an attempt at support once again off of a lower high this time, which gives the bears the upper hand, okay? That would not be too promising. For me, if this is going to remain bullish, it's got to fill the gap and hold for a gap fill reversal inside of Apple, okay? That's what I've got for you on this one. Netflix, nothing's going on here, opening inside of range. Tesla, this is an interesting one, of course, as well, because it's gapping up. It's currently sitting right at that 900 level. So if we take a look at the daily time frame chart, you can start to think of this as a look below and fail if we can accept above that 900 with a little bit more strength, okay? As of right now, it's a little bit wishy-washy because we're opening right on it. If we get an opening drive higher that puts in a bull flag just under the overnight high, that's more promising, right? You can take the break of the overnight high to get us back to potentially the top end of the daily balance from right around in here, roughly 943. I know some people are just rounding it off to 950 and saying, okay, if 950 goes, that's where we're looking for the rotation to 1000. I would try to be a little bit more tactful than that, and instead be, being patient, right? We know that this area right here produced a lot of chop. So at first, that's your first target. I wouldn't just assume that it has to break this time around and go to 1000 in Tesla, okay? So that's what I've got for you here. Again, the gap fill trade is not so attractive because we're opening very close to yesterday's highs. And again, we're right at that 900 level. So instead, what I would watch for to keep it very simple in Tesla is, can we hold 900 on the open? Can we get up above? And if so, breaks of the overnight high, 908 roughly, are attractive for long opportunities into the top of the daily range, okay? Next up, we have, interesting on the list at least, Facebook. We're going to skip Alibaba. Obviously, that one's kind of a no-go. And this one is producing a double bottom, or at least it's trying to, okay? We are gapping up and out of the prior day's range, very close actually to the highs. Maybe it may not be a true gap by the time the open comes around, but just like in Tesla, I would be patient. I wouldn't necessarily be looking for the downside in Facebook. I would say, okay, if we can take out this high of day right here, where's the next target? Well, I would start to look for this fair value in here, roughly 226. I wouldn't really push my luck any higher than that. But my first target would probably be 225, okay? So taking out the overnight high on a bullish pattern off the open, holding the gap up, sort of respecting the prior day's high, that to me is the upside trade in Facebook. If it wants to roll over, you're probably going to get two-sided back and forth activity around that 218 because there's a ton of fair value here. You can see all of the chop, the time that was spent, and the volume that was committed at these levels. So Facebook probably looking for longs if we can hold the gap up and the broad market is moving higher. Let's continue along and talk about Nvidia. This one also gapping up, obviously, taking out the prior day's high. There it is. If this one pulls back, fills the gap, and does something like that, that's interesting. I probably wouldn't look to trade for the gap fill in Nvidia like we've been talking about with some of our other sectors mainly, but this is probably not the gap fill trade, but it's okay. If we fill the gap and then reverse off of it, that's the attractive area where you say, okay, now it's time for longs, noting that we're respecting the high of yesterday's session. Note that we do have some important resistance right overhead around 257. Now, granted, that's a $7 range here inside of Nvidia. Is that worth trading for? Absolutely on day trades. So just like we talked about in Tesla, just like Facebook, breaks of the overnight high on a hold of the gap up here definitely get interesting for continuation into that daily level above, which is 257.68. All right. One quick check-in before we sort of move along to the last core company. Again, let me know. I think the mic is still sounding good. It hasn't cut out yet, but let me know in the chat if things are still all set. Love to hear from you. And also, don't forget, if this is valuable to you, if you enjoy this, hit the thumbs up button. I would also really appreciate that. This obviously costs nothing. The Discord costs nothing. A thumbs up would go a long way, just, illustrating some support for the channel. So Microsoft, this one opening on a much firmer gap up. Now, what this is going to do is provide, okay, if there's a rollover in the marketplace, then this is where we want to be looking for the gap fills, okay? So obviously on the other chart setups we've seen so far, we're not looking for those gaps to fill because we're opening very close to the prior day's high. But in Microsoft, you can see that there's a much larger range in here. So if the market wants to roll over, this is the one where you look for the short, right? So failure to take out the overnight high on Microsoft, back down through the open, which is also going to represent a failed back test at the 300 flush point on the daily time frame, that gets interesting for the gap fill down towards roughly, let's call it 296.50s, okay? So this is the name where you want to be looking for shorts if we get some sort of rollover in the broader marketplace and the majority of the gaps are not holding up, okay? If Microsoft does something like this, and obviously the broad marketplace is is holding up, I would probably just be patient and look at other setups. Tesla strikes me as being much more attractive here. Just noting, right, that sure, we're recapturing that 300, but what do we have for structure overhead? Not a whole lot, right? There's a lot of chop in here. There's a lot of back and forth nonsense. Doesn't strike me as being the clean trade to the upside. If you were dead set on trading it, maybe I would start to target this high around 304.25 on a break of the overnight high, okay? Julio, you're asking, failed to take out the overnight high on what time frame? It all depends on your trading time frame, right? So if you're someone who is a scalper, then you want to see it fail on like a 5-minute time frame and reject back lower, and then we're through the open for the short. If you're someone who's got a much longer time horizon, you're like I wouldn't call it a swing trader, but if you're a full day trader, right? So you're holding a position from the open to the close, then maybe you're looking at a 15-minute chart, a 30-minute chart that fails to take out this level. So the 30-minute bar does not close above, right? So it all depends on your time frame, Julio. Hopefully that's a helpful answer to you. It's all individualized, right? I can't tell you exactly what setup is right for you because your trading psychology is also different than mine. Personally, and those of you who are around the Discord frequently, you know I'm a short-term scalper. So for me, I'm always watching like a 2-minute chart, a 5-minute chart, and sometimes a 15-minute chart. Anything higher than that doesn't really serve me a huge purpose, okay? Obviously, we're always looking at the daily as well for reference points. So hopefully that was useful. If you guys have questions like that, feel free to drop them in the chat. I'm happy to provide any sort of little insights I can in these live streams. So hopefully that was good. Microsoft, we've sort of hit this one home. Again, this is the candidate for the gap fills if the market wants to roll over, all right? Let's continue along, get out of our core list of companies. We want to take a quick look at AMD, okay? AMD yesterday was a candidate for a dead cat bounce off of the 200 SMA, right? Very extended into that level, high volume. And on today's session, or yesterday's rather, you can see we did get that dead cat bounce off the open, rolled over a bit into the afternoon. But what's going on here is fairly interesting. This is always a setup. If you guys take away anything from this live stream today, take away this. If you ever get a gap up over a red candlestick, there is definitely going to be an opportunity on the open, okay? Why is that? Well, people were getting short into the close here, right? As this rolls over, we produce a red candlestick. People are feeling bearish. We have an inverted hammer. It has bearish implications with sellers in that upper wick. If we can gap up and over all of that activity, anyone who got short in this area right here is dead wrong about the position. If they're any sort of a disciplined trader, again, not a long-term investor, but a trader, then the proper stop loss is over the high of day, right? So if we accept above that level, basically if we accept above today's opening print, as long as it's a green gap up, we're looking for some sort of, I say this word very lightly, especially in the wake of everything that's going on here on YouTube, there could be potential for a small short squeeze. Now, short squeeze does not mean that this goes to 145, 135. Short squeeze simply means that we have added buying pressure on the stock, okay? That's all I mean by that. Want to be abundantly clear about that, but this is definitely something worth watching. Gap up over a red candle looks good for higher. As long as any sort of pullbacks hold the opening print, take out the high of day, there you go. There's a long entry. If you take out the overnight high, there's another long entry for a more conservative trader, right? So AMD, definitely watch this one into the bell. Next up, we have Starbucks. SBUX is the ticker there. And this is another very similar setup, gap up over red, okay? If we gap over the red, what happens, right? Anyone who's wrong about that position there should start to close, and we can get the rotation higher. From the daily perspective, it would be a move into the range, which would also produce a look below and fail. As we know, the target's always the top end of the range, which would roughly be 98.50s inside of Starbucks. I like what's going on here. Now, the options that trade on Starbucks are not that great, okay? They're not the best thing in the world. The liquidity's not as good as something like Apple, obviously. So please be careful, monitor the spreads. If you want to just trade it with shares, I wouldn't fault you for that either, okay? So Starbucks, look below and fail, gap over a red candle. Like that setup. Next up and lastly, we have Rivian, RIVN is the ticker there. And this one is just simply going to be a break of a couple days of highs. You can see that we have obviously these nonsense levels on the left. We're going to clear that drawing setup, obviously not really doing us a whole lot of good there. Let's zoom in a little bit. And you can clearly see 2-day highs, right? So 2-day highs back to back, red and green. It's also the overnight high. So I would start to classify this as a pressure cooker top. That's the term that we use around here on the channel. If you're new to the stream, if you haven't heard the term before, pressure cooker top, it's just a bunch of equal highs. When that breaks, the pressure is released, and maybe you get a move to the upside. Now, because we're in a very aggressive daily downtrend, I don't want you to overstay your welcome. So our target here is going to be very, very tight, all right? We're just looking for the high of the Thursday session at $69, essentially. If you want to push it, you could say, okay, I'll take off 3/4 of the position around this area, and then I'll maybe hold a quarter to see if we can get continuation into this pivot high, the stronger high, up here around 71.37, okay? So that's the upside here inside of Rivian if we can take out the 2-day highs and the overnight pressure cooker top that's forming at 66.26. Let's take a quick look at our sort of options chain in Rivian. Obviously, we're not going to show any volume here, but we want to look at open interest as a brief indication of where there's kind of interest. Open interest makes sense, right? So it wouldn't be terrible to take the 65. Oops, we're looking at the put side. We want calls, obviously. We're looking bullish. Right here, you've got 65 calls, 3,276 on the open interest. Anything underneath? So this starts to strike me as interesting. The 70 calls are sitting here at 5,276 shares, contracts rather. And that strikes me as interesting. The reason I say that is because those numbers are almost exact, the 276 part, it would strike me that someone probably has some sort of spread on the company here between those two strikes, 65.70, a $5 wide. I don't know if it's a call vertical, if they have some other leg out there that we can't see, but I'm sure there's a position here, and we can see that on the options chain, okay? So I would just go with whatever's the most liquid. We obviously want to target the 50-cent delta if we can, which generally puts us right at the money. And that's the Rivian play here. It is a long opportunity. Again, if you're comfortable taking long shares, there's nothing wrong with that either, right? You don't have to use options just because we are a sort of options trading community. Nothing wrong with dabbling with shares every now and then, especially if the spreads on the options don't make sense. So I'm going to open it up right now for any questions in the live stream chat. I would love to hear from you guys. Anything that you may have to contribute, anything that you may have to offer, any questions you may have. We'll leave the next, 3 or so minutes for that to happen. Then I'll check in with you guys in the Discord. Just a quick reminder to anyone new to the stream, if you take a look at this link right here, that's where you can access the Discord. It's completely free. It's just a redirect link. When you go there, it's not going to ask you for any, card information, no payment, no nothing. It's just going to send you right to Discord. Just a redirect link. If you want to click it directly, it is linked in the description of today's video. So feel free to check that stuff out. Any questions here before we wrap it up? I'll leave the stream going for another couple of minutes here. The feedback has been fantastic in the chat. I really appreciate that, you guys. Let's see. It looks like we have someone requesting Mara or crypto. Let's take a quick look at BITO, which is the ETF, okay? Hopefully that's going to do it for us. Opening on a massive gap up, okay? If we zoom in, gapping over red. So again, the same sort of theory applies. There's potential here. The only thing that's sort of different is obvious that this is going to be controlled primarily by Bitcoin, right? We are gapping over red. Anyone who initiated a short looking for the gap to fill underneath, going to start waking up feeling some pain here. So maybe there's continuation. I would want to see it hold the opening print. If it does give us the failure to take out the overnight high, trades lower through the open, I would not look to short this just because we know that this is, sort of controlled by Bitcoin itself. It's not so much, the emotions and psychology of regular traders, right? This is pegged to a price of Bitcoin is what I'm getting at, okay? So hopefully that answers your question here on crypto tickers. What's my favorite stock to trade? Personally, it's Apple and Tesla, just because Apple is old faithful. This thing, moves fantastic. There's a lot of liquidity here. And then Tesla, obviously, because it's a big mover, right? You get a lot of deltas to pick up when you're looking at something like Tesla. So hopefully that one answers that. What else do we have? What was the double bottom on the Starbucks chart on the bottom right? Okay, we're going to quickly go on over to Starbucks, then we'll wrap up the stream. Starbucks, double bottom on the right. Yeah, I suppose you could start looking at this, right? Is that what you're referring to as a double bottom? If so, then absolutely, right? Your neckline is kind of right here. We took that out. As long as that holds, it's basically the structure from yesterday's session. I could see that being reasonable for reversals off of this area in Starbucks, roughly 94. What I don't like about that, though, is if I just zoom into the daily, it's taking out the bottom end of the range, right? Maybe if you split the difference and say that there's support in there as well, that sort of holds it up, but not not ideally what I would be looking for. I really want to see the hold of 94.50, 94.60, that general area. All right. So that's going to do it. Don't forget, on your way out, if you enjoyed the stream today, hit the thumbs up button. I would really appreciate that. Feel free to join us in the Discord. That's where we're about to head and hang out. And with all that being said, I'm going to head back and see you there. All right. So back to the waiting stream.